Nvidia just reported another massive quarter, but after such enormous growth, can Nvidia keep this momentum going? In this video, I'm breaking down Nvidia's most recent quarter. Take a look at the charts, discuss the three biggest risks to the business, and I'll give a one-year price target for the stock. Let's generate alpha. Here are the headline numbers. Nvidia reported quarterly revenue of $81.6 billion, beating analyst expectations. That was up roughly 85% year over year, which is an enormous growth rate for a company this large. The biggest driver behind Nvidia's growth continues to be its data center business, which reached roughly $75 billion this quarter alone, from hyperscalers, AI cloud, industrial, and enterprise. Earnings per share came in at $1.87, also beating Wall Street expectations. One thing that continues standing out with Nvidia is profitability. Gross margins remain incredibly high, around 75%. Nvidia also announced a massive $80 billion share buyback program, and they increased the quarterly dividend from 1 cent to 25 cents per share. The company gave strong forward guidance. Second quarter revenue should be approximately $91 billion. That suggests management still sees enormous AI demand going forward. So overall, another very strong quarter from Nvidia. Let's take a look at the charts. Right now, Nvidia is trading above its 50-day moving average, which is generally considered bullish. It suggests buyers are still in control, and momentum remains strong. Throughout Nvidia's massive rally, the stock has often pulled back toward the 50-day moving average before continuing higher. Many traders view the 50-day line as a key support level during strong uptrends. Nvidia is also trading well above its 200-day moving average, which is generally considered a strong bullish signal for the long-term trend. The 200-day moving average also acts as a key support level that many institutional investors and traders watch closely. Nvidia remaining above this level suggests the stock's long-term momentum is still very strong despite periods of volatility. The large gap between Nvidia's current share price and the 200-day moving average also highlights just how powerful the AI-driven rally has been over the past year. However, because the stock has moved so aggressively higher, some investors are also watching carefully for potential pullbacks or periods of consolidation, as high-growth technology stocks rarely move up in a straight line forever. The relative strength index for Nvidia is currently sitting in bullish territory, reflecting the strong momentum behind the stock's AI-driven rally. An RSI reading above 50 generally suggests positive momentum, while readings approaching or moving above 70 can indicate the stock may be becoming overbought in the short term. The stock didn't move much after its earning release. Nvidia stock tends to move well before, based on how its AI competitors do. Overall, the long-term chart looks strong. Nvidia is in a clear uptrend. Here are three of the biggest risks that could meaningfully impact Nvidia shares going forward. The first major risk facing Nvidia shares is customer concentration risk. A huge portion of Nvidia's growth is currently being driven by a relatively small number of customers. Companies like Microsoft, Amazon, Meta, Google, and other hyperscalers are spending billions on AI infrastructure. Right now, that spending has been incredible for Nvidia. But here's the risk. When a company becomes heavily dependent on a handful of major customers, it creates concentration risk. If even one or two major tech companies decide to slow spending, delay AI expansion, or develop more of their own chips internally, it could have a noticeable impact on Nvidia's revenue growth. The second major risk is competition. Right now, Nvidia dominates the AI chip market, but competitors are coming. Companies like AMD, Intel, and even major cloud providers like Amazon, Microsoft, and Google, are all investing heavily into AI chips. Many large tech companies don't want to rely too heavily on Nvidia forever, so some are developing their own custom AI chips internally. Over time, increased competition could pressure pricing, market share, or profit margins. The third major risk is that AI demand eventually slows down. Right now, companies are spending enormous amounts of money building AI infrastructure. Billions and billions of dollars are flowing into AI servers, data centers, and advanced computing. But eventually, investors need to ask an important question: what happens if AI demand slows? Many companies are currently racing into AI because they don't want to fall behind. But at some point, businesses may reduce spending, delay projects, or become more selective. The semiconductor industry has always been cyclical. If AI infrastructure spending cools faster than expected, Nvidia's growth rates could slow dramatically compared to what the market currently expects. Now, the big question: where could the stock go from here? Most analysts maintain a buy rating with an average price target of about $295. Looking at the discounted cash flow model, the base case estimated value for the stock is about $144, and the best case is $447. Please keep in mind that DCF is highly sensitive to assumptions. Even small changes to growth or discount rates can swing the fair value dramatically. As for my opinion, I am giving Nvidia a buy rating and maintaining my one-year price target of $350. Here are 3 reasons why I believe it's a buy. The first major reason investors remain bullish on Nvidia is simple. The company is leading the AI revolution. Artificial intelligence is becoming integrated into almost every industry. Technology, healthcare, finance, automation, robotics, and even everyday consumer products. Powering all of that requires enormous computing power. That's where Nvidia comes in. Nvidia's GPUs have become the gold standard for AI training and AI infrastructure. But what really gives Nvidia an advantage isn't just the chips, it's the ecosystem. Nvidia's software platform has become deeply embedded into AI development worldwide, and once companies build their AI systems around Nvidia's ecosystem, switching becomes difficult and expensive. So as AI spending continues growing globally, many investors believe Nvidia remains one of the biggest long-term beneficiaries. The second reason Nvidia stock remains attractive is data center demand. Major companies like Microsoft, Amazon, Meta, Google, and other hyperscalers are spending billions building AI infrastructure. We're seeing an AI arms race happening right now. Companies are aggressively investing into AI servers, cloud computing, AI models, and advanced computing power. Nvidia remains one of the primary suppliers benefiting from this spending. The company's data center business has absolutely exploded. Management continues to suggest AI demand remains extremely strong. The third major reason investors remain bullish on Nvidia is profitability. Nvidia isn't just growing quickly. The company is also generating enormous profits. We're talking massive free cash flow, strong margins, and billions in earnings. Financially, the company is in an extremely strong position. That gives Nvidia the ability to invest heavily into innovation, develop next-generation chips, expand infrastructure, and stay ahead of competitors. Very few companies combine hyper-growth, industry leadership, and elite profitability all at the same time. Bonus reason why Nvidia is a buy: future potential in China. The biggest issue for Nvidia in China right now is politics. The government has placed restrictions on exporting Nvidia's most advanced AI chips to China due to national security concerns. That means Nvidia cannot freely sell its highest-end AI chips, for now. Over the long term, presidents change and government policies change. Could you imagine what Nvidia's revenue and earnings would look like if restrictions to China loosened up and they were able to conduct business freely? Long term, China remains a massive opportunity for AI growth because of the huge population, rapid AI adoption, and government investment into technology. Putting it all together, at a forward price to earnings ratio of 21, the stock feels cheap considering the enormous numbers it's reporting. If AI continues transforming the global economy, Nvidia could remain one of the biggest beneficiaries of the AI revolution. Do you think Nvidia stock is still a buy after these results? Thanks for watching. If you enjoyed this video and want more earnings recaps with one-year price targets, please like and subscribe. Until next time, keep earning, keep saving, and keep investing. I own Nvidia shares through an S&P 500 index fund. This is not financial advice, just my personal opinions. Make sure you consider your own risk tolerance, time horizon, and financial situation before making any investment decisions.